Hey guys, it's a market update. What is happening with FTX and Binance? In this video, I've got data and the background to all of this and what is actually happening, how FTX are responding to Binance essentially trying to dump the FTT token over the next few days or weeks. There's a huge amount going on. I'll leave timestamps in the description for all of the different bits of data. I'll also leave links to as many dashboards and pieces of information that might help you as well. I'm going to go over what I think of it, what people should be doing if they hold any of these tokens as well. So check all of that down in the description there. So as of right now, yes, the market is down on the back of all of what's going on right here. It's big monumental shifts in terms of what's happening in crypto and some of the divisions and power lines within crypto. So there's a lot going on. For the most part, Bitcoin, yes, it's going to trade down on this. 5% is just a fairly normal move for Bitcoin anyway. Now for FTX and their trading firm Alameda, supposed to be separate, but they have a lot of lines into each other for sure. Most of their collateral and the problems that they're having really centers around their collateral and their assets, which is FTT, Solana, and some of the Solana ecosystem tokens that FTX have obviously got themselves as well. So you can see it's really Solana down 13%, FTT token down 30% right now. That's really taking the brunt of things. Obviously, every other token is going to react. Now, in a really Chad move, Binance coin, BNB coin is actually up 2%, which is pretty outrageous and just shows you where the power lines are. So let's go over everything, where this started and how it's going to happen, and so why Binance are actually starting to sell down their FTT tokens. So I've actually been putting updates in the private groups that we have as part of the Crypto Investor course. Check that link if you want to see what the Crypto Investor course has and all of the private groups that we have there, which obviously discuss this stuff in real time. But essentially a few days ago, Binance came out and took a shot across the bows of FTX and were saying that they're going to start selling down the FTT token. Now, there's a few reasons for this, but the main one is that they weren't happy with something that has been coming out over the last few weeks, which is how FTX are approaching regulation. So as you can see here, FTX equity last year, that was part of Binance's exit. So Binance actually funded FTX in the very, very early days. We'll see that later in the video. But they got some FTX tokens, which is FTT, which is the ticker, to the region of 2.1 billion and some BUSD as well. Due to recent revelations that have come to light, we've decided to liquidate any remaining FTT on our books. Happens to be around about 500 million or more worth of this FTT token, which if you look at the float and the daily trading volume, that's a lot to be dumping on the market. And so expect the price to go down there. But obviously there's the Alameda story as well, who have a ton of assets on their book, which is basically mostly Solana and FTT. And they have a lot of debts, which are potentially being leveraged on the back of this collateral FTT. If that collateral falls in value, are those debts essentially rotten at that point, with more contagion to who they're lending from and everything. So that's why it gets very complicated. We will try to do this in a way that minimizes market impact. Don't think that's worked out. Due to market conditions and limited liquidity, Binance always encourages collaboration between industry players. Our industry is in its nascency, and every time a project publicly fails, it hurts every user. Again, there was no real news about either Alameda or FTX failing in any way, so why put that in? It may just be a kind of slip there, or maybe people are asking, does he know something that maybe other people don't know? We typically hold tokens for the long term, and we have decided to be transparent with our actions here. More explanation of this as well. It says liquidating our FTT is just post-exit risk management, learning from Luna. We gave support before. They actually gave a lot of support to Luna and wanted to try and bail them out at that time, started looking into everything, and then obviously realized it was just unsavable. Luna didn't treat them very well either, even though Binance was a big investor there. They obviously took a massive hit on that. They lost billions of dollars, holding on to that. So they're looking around, trying to obviously make themselves stronger as well. We won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their backs. This is it. This was the show on Banklist that basically sparked this all off, in my opinion. Again, links to everything down in the description that can be linked. This was, coming from many other Twitter spats as well. FTX and SBF made it very clear, essentially, that they were willing to throw DeFi on the fire in order to get more regulation for their own centralized exchange. He was essentially spending billions in Washington and DC to lobby for regulation that would benefit his exchange and be to the detriment of decentralized finance and all that's going on there. Essentially, any DeFi protocol that wanted to offer its product to US citizens would have to go through KYC and AML, which is essentially making it centralized at that point, destroying DeFi and obviously benefiting his exchange. That's how I read it. That's how most other industry players have read it. And he's been doing it for his own good. That's how most people are reading this situation. So Binance are obviously taking a stand here and putting, their flag in the sand. Just to confirm this as well, you can see even a few days ago, Binance, literally this tweet from CZ, Binance is investing heavily in DeFi. So as we know this, FTX is essentially trying to destroy DeFi. So here is the rift, right? And you have one company like Binance with FTT tokens, and they're thinking, we just have fundamental differences here. We need to get rid of this. And that's what they did. Now, the result of that is a dumpster fire of speculation, of insolvencies and everything, which, CZ has never actually said or tried to spark. He must have known this probably would have happened, but actually he's just come out and been very open about what he was doing and why. All the insolvencies and everything like that, all the rumors of at least, are obviously, just what the market is going to do once it looks into the books of Alameda, which I'll get onto. If you're a customer of FTX or you have an FTT token, you're looking to trade this, this is what's happening right now. Now, Caroline, who heads up Alameda Research, tweeted out to CZ from Binance that they were happy and willing to buy all of FTX, the FTT token from Binance at $22. Now, what's really important with trading is levels. The price of something is always attracted to where the liquidity is. Now, a lot of people were questioning why this $22 mark was so important for the head of Alameda to actually come out and buy the tokens from CZ right at this price. So a lot of people are speculating here that potentially Alameda have a ton of these FTT tokens that they use as collateral on their balance sheet to then go and buy other things and take loans against. Now, if you take a loan against collateral, you will have a liquidation price. If you've ever traded on leverage or anything like that, there's a liquidation price where you borrow lots of money based on collateral, and the collateral is used essentially to fund any losses. Now, there is a liquidation price at some point that was now speculated to be 22. So putting that online, if you've ever been a trader or been around traders, you never ever open your trade to the market, right? You never let the market makers know your red line in the sand or any price levels, right? If you ever traded, you have to be extremely careful about opening your price to the market, because once they know where your weak point is, guess where the price is going. So it's really important, this 22 level. Now, what you can see here is that they danced around it for a while, and it's just been absolutely cratered today with a huge sell-off. Now, what we can't confirm is if 22 was a liquidation threshold for Alameda, or whether it just happened to be around $22 at the time of the tweet, and actually they were happy to see things go lower. Anyway, that's been tested, and as you can see, we're basically trading right down to 22 now. We're on the 4-hour chart here, and there is a dead cat bounce in process. I wouldn't be trading this dead cat bounce. You see, it went down all the way to 15, dead cat bounced up, and now we're looking at potential consolidation here. But this thing, potentially goes a lot lower because you have the entire market now shorting this, expecting things to go lower and lower. Now, FTT, it depends how much FTT is actually used by Alameda as collateral to borrow against. If that is the case, and Alameda essentially are seeing their assets and their balance sheet fade away, that's a bigger problem for Alameda, and that's what the market is going to try and find out right now. Now, it's not the $500 million or $1 billion, whatever Binance have, that they're dumping that's actually the problem. The problem potentially for Alameda is that they have a lot of FTT tokens that they're using as collateral that are now becoming less worthless, essentially, right? So That's a problem for any collateralized loans that they have. That's a big blow up, maybe potentially in the region of $8 to $10 billion. So it's a big blow up, and it depends who's lending them that money also. But in the big scheme of things, I don't believe this is anything like Luna or 3AC. I think that was the real big leverage blow up. Those guys were essentially leverage longing on an uncollateralized basis Bitcoin and ETH. And Avalanche and others, right? So they were taking other people's money that they had no collateral for and leverage longing the market. Whereas I think Alameda is potentially not in such a serious situation, but they could certainly go bust. We're at FTX though. FTX and Alameda aren't exactly the same, but obviously it's a big problem. So as you can see here, SBF, now FTX and SBF have been pretty quiet, probably got a lot of work on with trying to salvage, whatever liquidity that they need. If you're a customer of FTX, just listen to this. A competitor is trying to go after us with false rumors. FTX is fine, our assets are fine. Well, let's look through this. FTX has enough to cover all client holdings, right? We don't invest client assets. So FTX is nothing like Celsius was, where they essentially lent out the vast majority of client assets to 3AC, who were just using things to go long on DeFi, couldn't pay it back because there's no collateral there. So they were using client deposits to lend out to someone to get 10% yield. That someone had nothing left when the crypto market started to fall, right? So this is very different. As you can see here, we have been processing all withdrawals and will continue to be. From what I've heard, a lot of people are having very slow withdrawals here, having to wait and maybe having withdrawal limits. So yeah, not perfect, but you basically have the entire customer base now withdrawing their funds all at once. What you can see here, though, is that it's heavily regulated. Even when that slows us down, we have gap audits with $1 billion of excess cash. We have a long history of safeguarding client assets. That remains true today. You can see they don't even invest in treasuries. There was another option here, which essentially says all client assets are held as is, and so they don't lend them out. All the cash that they have, either in the form of USDT stablecoins or US dollars that are on the platform or any other fiat currency, they just keep them in cash. They don't even invest in T-bills or anything like that. So from what I would assume, everything is here for FTX, right? So they're not insolvent as such now. The big problem is that when everyone stops using a service, suddenly your business makes no money, right? So beforehand, when everyone was saying, I think there's a 1% chance that FTX will go insolvent, right? As in no chance. That was before, assuming that they still have people trading on their system paying trading fees to fund their business. If 90% of everyone has withdrawn their money and is not trading, you now have no business. And so if that happens for long enough, you just, become insolvent, right? You cannot pay your debts and you don't have any income. So that's the issue right now. That is what SBF and FTX have to actually come out and try and save. From my point of view, what they would have to do is completely clear Binance's block of stock or of tokens. But they said that for some reason, Binance don't want to trade over the counter in a big block. They want to leak it out over the market over the long run, which is, yes, absolutely a way to inflict the most amount of pain on SBF and FTX, because what they'll have to do now is try and support the FTT token, not only with Binance's selling, but with everyone else's selling and short, future short positions as well. There's also speculation here as well that some potential over-the-counter deal or OTC deal has been agreed, but again, difficult to understand if it has or hasn't. You can see here a lot of addresses are being looked at. So CHZ, which is Chiliz, that token, Loom, SHIB, Link, DYDX, all getting carted at the market to fund, other parts of the business. So looks like those are getting sold off as well as part of that. But it says here, I think from what I've seen, it's possible that Alameda and Binance did get some form of OTC deal done. Otherwise, the actions are too random and inconsistent. Looks like I was right. So we have Shaka Trades here. There seems to be an OTC desk, which is Genesis Trading, potentially trading this OTC deal of around $42 million worth of FTT, still far away from any large amount of the actual block of Binance's tokens to be cleared though. The main issue the market has with FTT's value in Alameda is the amount of tokens that aren't circulating that have value created out of thin air, and this is how that works. So as you can see here, FTX have actually posted this themselves saying, look, you can see our revenue. It's right there in the open. you can work it out by how much FTT that we burn each week. So many exchanges do this where they take a percentage of the fees that they charge users. In FTX's case, it's 33%. So 33% of all trading fees goes towards, and that's in dollars, goes towards buying back FTT tokens. Now, what that does, it's the same as a stock buyback or a share buyback, where you take profits, you buy back stock, and you cancel the stock out of the market. That has the effect of increasing the value of the shares that are circulating in supply. The problem comes when you have a bunch of tokens that aren't circulating in supply, right? Who owns those? And so the valuation of the token is supporting a lot of valuation of those tokens that aren't being traded. And so what are they being used for? So let me explain how that works. You have the FTT token here. You can see the circulating supply is around 250 million. The total supply, according to FTX, is around 330 million. So let's say you've got around about 2/3 in circulation right here. Now, if you go over to CoinGecko, they have a much different story. Circulating supply, according to them, is 133 million out of 328 million. Like you can see here, though, it doesn't really matter. You can see the fully diluted valuation is very, very different to the market cap. The market cap is the price of each coin multiplied by the amount of coins in circulating supply. It's less than the total supply. Who owns that extra 100 odd million FTT? Alameda, other investors that maybe are locking them up and using those tokens as collateral to fund loans against. That's what the market is worried about right now. Why that's important is because, as you can see, FTT, they actually burn a bunch of tokens every single week. This week is a bumper burn. So even in this is why exchanges, they make a lot of money, because during times of high volume, they just make more money because they're charging fees on more volume. They usually burn around $2 to $3 million per week of FTT token. This week, it's around $6.7 million that they're going to burn. But remember, they're using this money to burn tokens that are in supply. So they're taking these tokens out of supply. So their money goes further, right? Because their 6 million is being used to burn these out of circulating supply. And so your money goes further and you're more able to actually prop up the price of these circulating tokens. And so whoever owns the rest of these is getting a great amount of paper assets that they can borrow against. But when liquidity issues are faced and when you have to sell them off, you realize that the actual value of these tokens, once you need to sell, is not what your loans are backed against, right? You said, well, these tokens are worth a few billion. Well, if you need to sell them right away, then they're not. And so that's the issue. That's the insolvency and liquidity issue that the market is worried about with FTT and specifically Alameda owning those, potentially using that value to collateralize loans. Even if FTX is a perfectly profitable business, it is credit crunches that can make you insolvent, right? Here's what's happened to FTX so far. Now remember, FTX have said they have all client assets. They don't loan them out. They are there to be withdrawn. You can see the huge capital flight right here. This is a bank run in the digital age that we're seeing in real time. As you can see, we've seen it with Luna as well. The Ethereum on the exchange is basically being completely drained, almost to zero here. They've got a few 100,000 left. You can see the Bitcoin, according to this chart, is basically zilch. 0.6 of a Bitcoin, I think I saw it as. Look at the stable coins though. They've been absolutely drained from the exchange. So, FTX is a very large exchange, one of the biggest, and obviously they have a lot of stable coins here. That's almost all been taken out, right? A huge capital flight away. So in terms of FTX, they seem to be withdrawing everything. Like they said, they have client assets there. So very, very different to Luna and 3AC. In crypto, not your keys, not your crypto. So if you have anything on exchanges that you're worried about, use the blockchains to take custody of them. FTX is going to get walloped by this. Their business is going to suffer as a result with trading volumes way lower, so they're definitely going to have to dig themselves out of a hole if they can. And for Alameda, there may be massive liquidations there, potential problems, but I don't think it's anything like Luna or 3AC. Check all of the links to the dashboards and everything that I use in this video down below so you can check that out. Link to the crypto investor course course, down there as well. We have private groups where, all the traders and investors are talking about all of this stuff in real time as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.